The United States just stabbed its oldest allies in the back. The Gulf countries, Saudi Arabia, the UAE, the same nations that hosted American military bases for decades, that built the entire petrodollar system with the US, left to deal with Iranian attacks alone. Now you might be thinking, okay, Middle East tensions, this happens all the time. What does this have to do with me? Everything. Because what you're watching right now is not just another regional conflict, it's the beginning of the end of a 70-year economic order. And if you don't understand what's being dismantled and why, you will get destroyed financially in the decade ahead. So let's break it all down from the very beginning. To understand 2026, we need to go back to 1945. After World War II, the entire world was in ruins. Europe bombed, Russia destroyed, Germany, Britain, Japan, all of them bleeding out economically. But the US mainland, completely untouched. In fact, American factories had been running at full speed during the war. The US came out of WWII as the only major power that was actually stronger than when it went in. This matters because, and here's the first insight, China in 2026 is playing the exact same game. Sit back, don't get directly destroyed, let everyone else bleed. We'll come back to this. So post-WWII, the US has all this economic power, and they use it to build a system. First, the US dollar becomes the global reserve currency. Every country starts holding dollars. Every trade deal starts happening in dollars. So in 1971, Nixon did something radical. He ended the gold standard entirely. The dollar became what's called a fiat currency, backed by nothing but trust in the United States. Think about what that means. The US now has the ability to print money without limit, the most powerful financial weapon in human history. But there's a catch. If you're printing infinite money, who's going to accept it? This is where one of the most underrated deals in modern history comes in. In the 1970s, the US goes to the Gulf countries, Saudi Arabia, UAE, Kuwait, and makes them an offer they can't refuse. Sell your oil in US dollars, only dollars. In return, we will give you military protection, access to our financial markets, and we will be your security blanket. This is the Petrodollar System, and it was genius, because now every single country in the world that needs energy needs dollars first. You want oil? You need dollars. Suddenly, the entire planet is working to acquire US dollars. This gave the US a three-layer empire. Layer 1, resources. Russia, Venezuela, the Gulf, they control oil, gas, raw materials. The US doesn't need to own these resources. It just needs to control who sells them and in what currency. Layer 2, manufacturing. This goes to China. The US essentially says, be our factory. We'll give you capital, technology, access to global trade routes. You make the stuff we consume. Why didn't the US manufacture itself? Manufacturing is toxic. It's low margin. Let someone else do the dirty work. Layer 3, finance and technology. This is where the US stays. Wall Street, Silicon Valley, the IMF, World Bank, WTO, all US-controlled institutions. This is where the real margin is. This is where the real power is. And for about 40 years, this system worked beautifully. Then, 2008 happened. The 2008 financial crisis nearly bankrupted the US. They survived only because they could print money, but it cracked the foundation of the system. And China watched. See, while the US was busy consuming and financializing everything, China was doing the unglamorous work: manufacturing, infrastructure, education, supply chains, building entire industrial ecosystems from scratch. And then, and this is the critical move, China started diversifying away from US dependency. It started selling off US Treasury bonds. It started building its own trade alliances. It launched BRICS. It developed its own energy supply relationships. Here's a number that will make this concrete. In 2025 alone, China exported $1.19 trillion, a record, by pivoting to the global south in Europe, not to the US. The US was no longer the only game in town. Now let's talk about what China controls that the US desperately needs. Number 1. Rare earth metals. These are critical for AI chips, fighter jets, space exploration, everything. Number 2. Pharmaceuticals. Most of the active pharmaceutical ingredients for medicines used in the US are made in China, then assembled in India, then shipped to the US. You are one supply chain disruption away from a medicine shortage. Number 3. Electronic supply chains. Even if your iPhone says assembled in India, most of the internal components still come from Chinese factories. So, what does the US have that China needs? Advanced semiconductors, access to the US consumer market, and the US dollar itself. China still holds enormous amounts of US debt. Blowing up the dollar would blow up China too. If the US economy collapsed from $40 trillion to zero overnight, China would collapse with it. They are mutually assured destruction. Neither can afford to fully blow up the other. So instead, they're fighting everywhere else. Here's the data point that nobody is talking about. 90% of Iran's oil exports go to China. Not 50%, not 60%, 90%. And here's the kicker. It's not being bought in US dollars. It's being paid for outside the dollar system entirely. So when the US and Israel are bombing Iran right now, ask yourself, who does that hurt the most? China. Destabilizing Iran destabilizes China's energy supply, and an energy-insecure China is a weaker China. Look at the map of the Strait of Hormuz. Roughly 1/5 of the entire world's oil flows through that narrow channel. If that region is in constant conflict, oil prices spike, supply is unpredictable, and China's manufacturing engine has to deal with energy uncertainty. This buys the US time. Time to do what? 4 things. Strategy 1. Tariffs. Hit China's trade advantage hard. Force companies to rethink supply chains. Slow down China's global expansion. Strategy 2. Energy disruption. Destabilize Iran. Lock down Venezuela. Secure Canada. The US is already the world's largest oil producer. They're building an energy moat. Strategy 3. Reshore manufacturing. Bring factories back to America. Use AI and robotics to replace the cheap labor they used to get from Asia. You don't need 1 million workers if you have 1 million robots. Strategy 4. Win the AI race. This is the most important one. AI is the next phase of economic power. The country that leads in AI leads the world. Full stop. The problem is, by backstabbing the Gulf states to do this, the US has destroyed something it built over 50 years. Trust. So the old order is cracking. What replaces it? Here's what most analysts get wrong. They think this transition will take 30 or 40 years, gradual, manageable, orderly. I think they are completely wrong. When trust breaks in a system this interconnected, it breaks fast. We are already seeing it. Alliances that took 50 years to build are unraveling in months. Trade routes being redrawn in real time. Countries that were firmly in the US camp are now quietly taking meetings with Beijing. The new world is not going to slowly emerge over decades. It is being forced into existence right now, under pressure, messily and violently. Here's what it looks like in 3 lines. 1. No single superpower. 3 or 4 competing blocks, none strong enough to dominate, none willing to back down. A permanent state of managed tension. 2. AI replaces oil as the defining resource. Whoever controls the compute, the chips, the data infrastructure controls the next era. That race is already underway, and it's moving at a speed that would have seemed impossible 5 years ago. 3. The dollar weakens but doesn't collapse. It shares the stage, a multi-currency reserve system.
gold making a quiet comeback, the U.S. losing its ability to print money and export the consequences to the rest of the world, a constraint it hasn't faced in 50 years. Nobody wins cleanly in this world. The U.S. loses its ability to dictate terms. China rises but faces its own walls, demographics, debt, Taiwan. Europe struggles to find its footing. What we are entering is the most volatile, disruptive economic transition in modern history, compressed into a much shorter time frame than anyone is ready for. And that is precisely why your investment strategy from 5 years ago will not survive the next 5.
Let me be direct about what this geopolitical shift means. The Gulf countries, Saudi Arabia, UAE, the entire GCC, are not going to forget this. The entire point of the petrodollar deal was, give us your oil, we give you military protection. The U.S. just showed that deal is worthless. Rich Gulf investors are already pulling money. Saudi sovereign wealth funds have billions parked in American companies. That relationship is now strained. We are moving from a globalized world to a fragmented, multipolar world. That's not a prediction, that's already happening. And the Goldman Sachs estimate says China's economy will match the U.S. by 2035. The Center for Economics and Business Research says 2037. These are not fringe predictions.
The first thing you need to accept is this. The last 20 years of investment advice is largely useless as a guide to the next 20 years. Fund managers who say, if you had started an SIP 30 years ago, you'd be rich by now, they're looking at the rearview mirror. The last 30 years were historically peaceful. Globalization expanded, markets went up. That era is over. So here are 3 things that actually matter now. Number 1, diversify across asset classes. You cannot be 100% in equities and assume they'll keep going up the way they did. In a World War type of environment, and that's what this is, just fought economically, different assets behave very differently. Gold, real assets, international stocks, cash flow generating investments. You need all of it. Number 2, diversify geographically and across currencies. This is critical, and most investors ignore it. If you are purely in one country's currency, and that country is a net importer with a weakening trade position, you are sitting on a depreciating asset. Rupee depreciation is not a theory, it's a trend. Design your portfolio accordingly. Number 3, invest across time. Design for cash flow. The question isn't whether there will be a crash. There will be. A 30%, 40% crash is coming at some point. The question is, do you have money available when that crash happens? Because if you do, that's when you make real wealth. Cash flow, rent, dividends, interest keeps money coming in during the uncertain periods, so you're never forced to sell at the bottom, and you always have ammunition to buy. And on the AI point, I've had 70–80% of my portfolio in AI-driven assets for the last year and a half. I believe this is the defining investment theme of the next decade. That hasn't changed. What has changed is the urgency with which you need to take this seriously. The world order that gave us 70 years of relative stability is being actively dismantled, not by accident, by design. Countries are repositioning, alliances are being broken, new ones are being built. This is genuinely scary, but it's also, for those who understand it, an opportunity. The question is, which side of that you're going to be on. If this video gave you even one insight that you hadn't had before, share it. Most people are sleepwalking through this. Help them wake up. I'll see you in the next one.